final use it. So I think last call there was like not enough spots or whatever. This is a trade I took today. I went break even here and made $3 times 5. And then I was like done. I like couldn't catch this. Like I almost caught this. I was like, but I was really bearish. And the only reason I took this was, I'll go over it probably, but there was a whole lot of reasons. Like this daily order block, 4 hourly, 30-minute. Yeah, and I was like, fuck it. Like structural. There was like a whole lot of structure shifts, and I was like, sure, we'll go break even here, and it just fucking wrecked me. But that's fine. I was like, I actually got out like here. But yeah, I think one of my mentees, I think he made like 2R. I think he just sold it at 2R.
Took the same trade on ES, but I was watching SPY as well, and it hit 92.66, and I don't know why, but when there's 3 6s in the number, people tend to place orders there. So I just entered and got a better entry and got 2R on that one.
You say there's 3 6s?
Yeah, 666.
That's quite
I don't know. Yeah, I don't know why. Like I think the S&P bottomed out at like 666 in 07, 08.
It's quite
I don't know why that number matters so much, but
because bro, I don't know, some religious.
So
who knows?
I entered there and I got. I was waiting for. I was waiting for a better. I was waiting for a long, but I entered around that number because.
Bro, look at this, bro. Look what
someone pointed it out.
Look what my equity's at right now as well. Sheesh, bro, we're getting conspiracy theories out here right now, bro. That's how I make money. I'm actually just
the devil runs the market.
I'm the devil, bro. There you go. Just kidding.
What do you think, though? The question I asked about.
I've got like a bajillion.
Like I was in it.
I'm so
gold short.
I mean, I think it's like one of those things where it's like I personally just like to let the trades run. Like I'm just like I'd rather just like lose, bro. I'd rather just lose. Like, take me out. Like I'll just lose. I'd rather just lose.
That's what I did.
Yeah.
I just. It was like, damn, I knew it was coming back, but, I don't know. But I'm back in it at a better price. I'm at stop at break even. I'm up, 1.5R for the gold short. That'll be my last trade today.
Yeah, on Fridays, I just take one trade, generally. Today I was like, once I missed this, because I was like really short bias, like really short bias. Like I really thought we were gonna go down. Through here. Like I thought it was like if we get the sweep here, like I really think we can go down. I think there's a lot of potential for like a sell off. But I was just wrong, and I just switched my bias once we moved up here. I was like, all right, this is not looking bearish anymore. Like I'll take this and just like trail, and like if it plays out, it plays out. Like if I get like a proper move, but I was like, I'm good. Like after this, I was like, I'm good. I have no idea, like really. Like I think the real move shorts were here, which was just like off this alley. We're inside of a daily, sort of like a level where the market had pushed down before. But once we started to really trend, I was like, I'm not. Like I was like, if this isn't the top, I don't want to be short. That was literally my thinking. I was like, if this isn't the top, if we're not just sweeping here, then rejecting and it's just gonna fucking go to the dirt, I'm not interested in being short. This is the only reason. Which I was like, I'll risk $100 here. Instead, I made my lunch money, bro. Thanks, Topstep, sponsoring my lunch. But like, I also didn't trade this on live. Like, I literally delinked, and I was like, fuck it, I'm not trading this. And the only reason I delinked was because I was like, also I was trading in front of a whole lot of people, and I was just shitting my pants, to be honest. And I was like, I don't want to. I'm scared. But yeah, that was my trade. I just trailed these lows. I was like, if it doesn't flush here, I don't want to be in this trade, basically. One of the guys.
Yeah, I noticed.
Like caught like the exact top. He was like in this, and he was like, "Well, this is like 3." It was like 4 hours. I was like, "What the fuck?" But this was my trade. It looked like.
Yeah, I noticed when we get close to the all-time high. I don't try and call the top, but it seems like we just float up there. Like there's always a push for no reason at all.
Yeah, for me, I don't mind putting on risk. I don't mind, being wrong. It was just more like I just don't want to. I want to hedge, right? Like I always want to be like, I don't want to be sat in these trades getting cooked. Like I don't want to be like smashing into the longs and then just getting stopped out or stopped out. Like when the writing's on the wall, you have to be able to shift bias. Like you have to be able to shift bias. Like for me, I was super bearish. Like I was like, fuck it. Like this would have been a great short. Like, but this was pre-market. But like, because this was like into the hourly OB and it was really, really good. And I honestly was saying to people, I was like, because I did some live trading with some of the mentees, and I was like, this short, holding this into the open, could have produced some fucking crazy shit. If this had just dumped off, like it would have been crazy. Even in here, I mean, like you got stop loss to break even right here. This is pretty messy. I'm gonna actually do this properly. Sorry. Like if we look at my strategy, right, where I'm like, this is pretty much perfect, exactly what you're looking for and this is from like this order block here, and there's like a 30-minute one in there as well. But if you look at this and you're just like stop loss to break even, wait for pullbacks, sheesh, because if you got in here, you could scale in a whole lot through this, and just print. But like I was kind of expecting like a really big push down. But I also didn't get cooked by shorts either. Like I didn't try to run shorts through here because it's just here. Like one of the mentees took this short, and I was like, "This is a bit shit, bro." Like I literally said it on the phone, on the call. I was like, "This is just shit." Like I was like, "This, like, yeah, it's like okay, I suppose, but it's just kind of mid." Because I was just like, "There's no structure here, like really." Like I was just like, "You're just kind of, you're just kind of vibing, through here." Where I was like, at least with this position, I was like, we had a push up failure and then actually a push down here. I was like, I'll take this. I was like, at least we're gonna get down to here, and I'll go stop loss to break even. I just didn't like this trade very much, but I was considering. Also, it didn't tap into any high time frame order blocks, so like I was looking here at this 4 hourly, and I was like, it just didn't tap into anything else. Like this initial push down here, it didn't tap into here, which is where I was looking from, which is where this trade comes from. And it didn't tap into, I think there's a 15 attached to that as well. So I was just like, yeah, this is just kind of vibing off nothing. This is basically you just pattern. This is basically just 100% pattern trading and golfings. Like, and you're also like counter trend. Whereas like this market's like pretty bullish at this point. Like once I saw this, because I remember we were talking on the call, I was like, the only long that I would look for was the long that played out, which was from, even though it's a bit shit, I think like Chico's in here. I was talking to him about this trade, which is this long, because I was like, this liquidity getting swept inside, even though this order block's real shit. Like it's not really like a massive initial push. It still broke structure. It's still showing you like this is where orders are, and especially when there's this liquidity here, I was like, if this gets swept, I want to see stuff. Like I was like, I just didn't take it. And honestly, admittedly, I probably should have, but I also wasn't really supposed to be trading. I haven't traded all week. I took one trade and made like 6R. I just have my mental health's been a bit shit. So I just haven't been trading too much. I've just been trying to, even today I wasn't really supposed to be trading, but I was on a live call and I was like, I can't just sit there for 3 hours and not trade, and this trade made sense. So this is a trade that I took because it was just from the order blocks. But yeah, in terms of the strategy today, it played out pretty well, like in general. But yeah, I always just let personally, bro, like answer your question. That's a bit of a tangent, but I just always let my trades play out. Even in this trade, like you just let them play out. Like, I don't know, like I'm just not gonna fuck with the trade. Like, I'd rather lose, you know. I'm not sure if you have that, where it's better to just lose. I don't know if you guys feel that way. How do I draw my purple levels? Sure. It's just a order box. It's just what's in the guide. It's literally what I just say in the guide. So they just come off higher time frame levels. So like with this one, it was this 4 hourly order block, which is a push down. And I was like pretty confident that we were short. And then I just add the smaller ones inside of it. So for that one, that was like 30 minute. And then there's a 15 minute over here as well. But yeah, it's just finding levels where the market has pushed down aggressively, and then finding levels where multiple time frames overlap on each other, and then that's it. That's really it. But that's just the strategy, and also the main reason why all of this I was confident in shorts was this, and I just thought that we were going to retest here, and then inside of that, obviously, there was the 4 hourly, and inside of that, there was the 30 minute, and inside of that, there was a 15 minute, and inside of that, there was a 5 minute, somewhere around here. In my brain, I was like, this could just omega dump off from this, because we had a trade, we traded into this yesterday, or whenever it was, when was it? 6 or 3 days ago. Everyone, I remember being like, the actual moves. I remember them saying this to me in the Discord, quote unquote, the actual move has happened, and I was like, no, it actually hasn't. And we were up here trading into this daily order block, and I was literally like, he told me, one of the guys in the Discord was like, this is the real move. Yeah, 4 hours later, this massive dump off, and that just comes from the higher time frame zones, which is where you have a little accumulation and then an expansion down, and then if it retests that area, generally I've found on every single time frame it will have some form of reaction. Like here, the higher the time frame, the bigger the reaction, right? And you can see this plays out like over and over again all through here. But how I draw them is I just get a whole lot of time frames and clump them together, and then come up with like a narrative based off those zones. Like, but today I was wrong. Today I was just fucking straight wrong. Super bullish day. But I did have the kind of the bias. We were talking in the Minty live call. That I did some trading with them, and I was like, if you are gonna go long, like all I wanted to see, I just wasn't confident in longs, and that's just like, that's okay. Like, you don't have to be right. I say this all the time to people when people just seem like they don't understand. You do not have to be right every single day. Like, you don't have to be right. You don't have to have an idea. You just have to protect the capital you have. And when you are incorrect and you see things that actually change your bias, like when I saw this, I was like, I'm really skeptical of shorts now. Like, I'm really skeptical. Once I saw this big reaction, I was like, yeah, I'm good. Like, I mean, the market still is baseline bullish, right? But I thought that we might get like I thought this could just be like a massive pivot. And we might get like a crack retest. And then like a dump, like a, 500 point dump or something. Like 1,000 point dump, But it's okay. It's okay to be wrong. I'm wrong all the time. Still make money. So you don't get paid to be right. You get paid to be when you're right. You get paid when you are right. To get paid a lot. Like when you're right, you get paid way more than when you're wrong. You can be wrong heaps. There's one week where I had a 10% win rate. Still made money. That fucking one trade was like, I think I had like 4 losses, 4 break evens, and like 2 wins or something, or like 1 win and I don't know, like another break even. But like when that one win hit, it was like 10R or like 5, 6, 7, 8R. I don't remember exactly, But like my point I'm making is that you don't have to have a high win rate. You don't have to be crazy with it. You don't have to be, making money every single day or being correct every single day. It's just when you are correct. It's like if I had really, really hardcore long bias going into today, which I didn't, admittedly. All I said was this is an area where, like, straight up, like in terms of a straight up structural, if we just look at structure, this is pretty cool. Like, this is a good trade. Like you got internal liquidity swept into a couple of order blocks. It's great. That's fine. Like, it's great, but I just didn't have the bias behind it. Where I just thought we were going to crack down. I thought it's too obviously bullish, so we're just going to crack down. And like, I was just wrong, and that's okay. But like, if you're right, like if I did come into today, for example, with a really bullish bias, and that was my analysis, and I caught this trade, scaled in all through here, this is like a 10, 20-hour trade. Like, legitimately. Like, there's 2-minute order blocks holding, new engulfings forming, fine, like we just keep scaling in, keep trailing with the trend. There's never failed so far. There's no point where you would have got trailed out yet. You'd still be in this. You'd be floating 3.4R and 3.5R. So you'd be making 3.5R on 2R. So you'd be up 6R plus this 3R. So you'd be up like literally 10R on this trade. So I don't care if I'm wrong. Because you can see in front of you, when the days you're correct, you're getting paid like an order of magnitude like 10. Like you don't care if you lose. And that's why I tell people with my strategy, it's way, in my opinion, I know a lot of people struggle, I think, but I think with my strategy, it's actually way easy to be a better loser because there's going to be days like today. Like today, I was straight up wrong on my bias. I go break even. Today, if I was straight up right on my bias, I make 10R, and I'm floating 10R. And like I'm just trailing through here, so I have no idea how much this will end up being. But my point is that when you're right, as long as the winners are a lot bigger, it's fine. But people don't think like that. I don't know why. I think it's because people like to be right.
Well, if you read Market Wizards, Paul Tudor Jones, which like one of the most successful of all time, he would go for 5-1, saying, okay, I only have to be right like 20% of the time. And I don't know, he made hundreds of millions of dollars.
Yeah, exactly.
And then you combine his strategy with Richard Dennis, who made 300 million at scaling in. That's what it's like. My two favorite traders in their strategy like combines both of them.
Yeah, exactly. And I think the thing about it, guys, is that you guys see all these people like who are on Instagram and aren't even like Paul Tudor Jones. Like, I've read this book. Sorry, this is a bit weird. I'm just looking at what shit. You can ignore this, but like this book, he talks about Paul Tudor Jones, but I read this book by him because I know that he trades very similar to me. Where is it? I read his biography, and then there's another one. This one. This is quite interesting. It's just his story, and I read this, and you guys need to take insights from real people, not insights from like even me, because all my insights are basically just real professional traders. That's just because I went and read all this shit of like actual people. I'm not going, hey Mamba FX, please teach me the trade. Because I'm like, these people are clowns, bro. Like, no offense, they're just like, I don't care if they're legitimate traders or not, they're just not at the point where I want to be. I'm not saying I want to be Paul Tudor Jones, because that's not the kind of finance, like I never want to be that level, like, that I wouldn't want to be. And I don't have, like, I couldn't be, I don't think. I don't have the credentials or anything that he did, but my point that I'm making is that you can still take insights from these people and still learn, and still learn from like real people, like learn from real traders. Don't learn from even me. Like, I mean, I think I'm probably like a good space because I learn, like I take all the insights and everything that I learn from like real people, not from TGR or like, I'm not shitting on these people. I'm like, not from like the TGRs, like Mamba FX, like FX Alex. These people are marketers, not traders. Go find real traders and see how they operate. Because you look at real traders, they all do what I talk about. Well, a lot of them do. Like scaling into winners, like not worrying about their win rate and just trading. Whereas like you see all these other guys and they're like fucking taking partials. I'm like, are you cooked? Like I'm like, who, like, I mean, partials are fine, sure. Scaling in and out of positions, I'm not saying it's bad, but I'm just saying like, you need to start looking at like real traders, like real people, Like people who like you don't have to question Paul Tudor Jones' like authenticity or his validity. He's a real fucking person. He's not like everyone else on the internet where you have absolutely no idea what they're doing. You don't know. It doesn't matter. They could be the most legitimate person, but they could still be illegitimate. These people you don't have to question. So you can actually take the people's insights with zero questioning, really. Like you should still question on some level, but you should mostly like try and take insights from people and everything. And this transcends just trading. This is just everything. Try and take insights from real people who've done real things, not like random anecdotal like life coaches and shit on the internet. Who the fuck are these people? Shut the fuck up. You know, like you don't like have any credentials to talk about. Not you guys. I'm talking about random people. Like go and get insights from real people who actually have proof that they are who they say they are. You know, like proper proof, not like, hey, I have a Lamborghini. Buy my course. You know, that's just my take though. Yeah, the thing is, like, I mean, I'm not going to get into that again like last time, but it's more so, I think it's just that Instagram gives you a weird view. But it's just like, go and look at real traders, like Paul Tudor Jones. Like, this is probably the best book. This is my favorite book, and it's pretty common. This guy, Tom Hugard, is legitimate level, like, top-end trader, retail trader. I think he's worked in finance. I think he did, used to. Now he just retail trades, but like this trade, you know, this is like you don't have to question his validity because it's all pretty documented. And like this book is basically my entire. This is how like. I mean, you guys are in a good space because like literally like this, my entire way of thinking is this book, which is a professional actual trader. That's why I think like this, because he scales into winners and loses well. If you can just lose well, not care what happens on the day, and just be Jay chill, and you're good. And scale into winners. You know, he does this stuff like who else? Who else would I mean, everyone's red trading in the zone, right? But I mean, those really are the three. Those really are the three that I would like. It's interesting you brought up Paul Tudor Jones because I definitely have like read a lot about him, and I was like, there's a lot of parallels with. Not obviously, I trade really low time frames, but a lot of parallels between how I think about stuff and he did and how he did. But he's obviously like at a huge scale. Yeah. How many cons do I trade?
I don't remember who said it. Market.
Oh, sorry, go on, bro. Sorry.
Oh, I was just saying, I don't know who said it in Market Wizards, but they said, they said, know the difference between wanting to be right and wanting to make money. Yeah. And that, if you don't want to be wrong, you inevitably, a lot of times, you don't make much on your wins. But it took me a while to realize what that meant.
Yeah. Well, I just look at it from, like, also people get very stuck with their bias. Like, you can ask, I don't think any of them are in here anymore. No. But, like, the guys I live traded with, I went into the super bearish. Super bearish. Like, we were trading all the way from here. From open. And I was super bearish. Even through here, I almost put on a position. Like, I almost put on a fucking 15-second rejection of this 2-minute order block. I was so fucking close. And I was like, nah. It's pretty overextended. It would still been a winner, but, like, I literally was, like, so married. I didn't get married to the bias. Because the moment I saw this break, and, like, especially, like, I mean, one of the mentees shorted here. But, like, the moment I saw this hold and push, I was like, fuck this. I ain't shorting this shit. Absolutely not. And I just completely was like, I'm probably done. I shorted this because I saw some structure form, and I was like, the risk to reward is quite high. Like, if we do really do what I thought, my initial sort of thesis on the day, which was, like, test the higher time frame OBs and then just, like, take everyone out of longs and then rip. I was like, the risk to reward is really high. Like, that's 10R naked, no scaling. Like, without, like, and, like, if I'm correct, like, it's going to test this liquidity. Like, minimum, right? Absolute minimum. So I was like, okay, well, this risk to reward's really good, and I'm going to get out. I'm going to keep my break-even quite tight. It was, like, 0.7R break-even. So I was like, it's fine. Like, I was like, this is a fine trade. Like, I'll take this anyway. Like, this is fine. I make $3. Like, that's fine. Because that trade actually has, like a actual, like, reason to enter. Right? It's not just like there's a whole lot of order blocks. I was like, there's probably enough steam in the engine. I was kind of using a bit of the bookmap stuff right? Like there was like aggressive sellers coming in here. So I was like, well, that doesn't mean that's going to hold, but it probably means it's going to at least seek out this internal liquidity, right? And then if I'm wrong from here, like I literally like one of the mentees was like freaking out. He was like, and I was sitting here like I don't give a fuck what happens once I'm break even. I was like, I literally don't care. I was like, this can come all the way up and then just fucking dump and like whatever. I don't care. I don't want to be in this trade if it doesn't flush. So I don't care. Like, and it's like that's kind of what I was saying. It's like it's not that I don't care. Like when I say I don't care about my trading, that's kind of more the way I operate. Where I don't care what happens. I care about trading, but I don't care about like what actually happens in trade. Like if you still got to think about things in the right way. Whereas like it's kind of what I was saying. Right? Like you can see here, right? Like if it doesn't flush straight through and really start to establish the trend in the way that I think I want it to, it's going to probably just tear, which is what happened. So I just don't want to be. I don't want to be stuck in this. But that's why not getting married to your bias is important. And then also just walking away when you like don't know. Because I'm like, these longs are gone. And in shorts, realistically, probably aren't going to play out. They may do. I mean, we still got like, what, two. It's the end on Friday. Probably not going to play out. But it may do. But it's okay. It's fine. Just got to chill. Be more, I think just be more relaxed about it. You know, have your little ideas. Like this was a good trade idea. Definitely would take it again. But ultimately today was, as I said earlier, was a long day. It's not was up. It's not like you won't find the strategy anywhere else. It's not like it's called Pulse. I just kind of think it's cool because it's kind of like Pulse, like the engulfing, like pulsy moves, impulsive moves. But I just kind of came up with the name randomly. I don't know. It doesn't really matter what it's called. It's just basically it's just supply and demand. You have to emotionally detach from the result if it follows. Yeah. You just kind of have to be like, whatever happens, happens. Because ultimately, you don't have any control anyway. Like, you guys getting mad at the market is ridiculous. Do you guys think that the market gives a fuck about you? The market's not a sentient being. Doesn't care. Doesn't have anything. You guys taking out, it's like caring about your ex who's moved on. Why? Like, she doesn't care. Like, it doesn't matter. Just move on. So it's just the same shit with trading. Like, don't care. Just be like, whatever. Like, it's gonna happen. Shit's gonna happen. You know? It's just about having control. You gotta have a lot of emotional. I think trading is far more, like retail trading, like discretionary trading is far more about emotional intelligence than like even book smarts, or even like, I think it's about emotional intelligence, like discipline really, more than like anything else. Like if we're talking about like fully discretionary, trading with like a basic strategy, it's far more about EQ, like emotional intelligence, than anything else. Just being like able to walk away. I think that's why it's hard. A lot of people aren't very. How do I deal with losing streaks and draw down both intraday and over periods? That's a good question. The way I deal with losing streaks, I don't care. I genuinely just don't care, and that's why like having the lower risk is important. Like having the $100 of risk is important because like I was even talking to I'll use my mentees because I've got like they give me a lot of case studies of like why people were idiots, basically. Not to say he's an idiot, but why people don't think about trading in the right way. He took 2 trades on the day and he was risking 300 because he didn't want to listen to me. He had 2 losses and he was freaking out because he's like, I've lost $600. And it's like 2 losses is not even a lot, and you just lost almost you did lose basically a third of your account. You're never ever going to be able to trade well if this is the world you live in. Ever. There's no way you're going to trade well unless you're already rich. If you're already a person who's got money and you don't care about the accounts at all, then yeah, sure, $300 and sim farm and do crazy shit. But if you're going to trade $300, in my opinion, why even trade 300? Just trade 1,000 or like 500, like a whole lot more. I have a really, really, really interesting take that I think a lot of you guys probably, because I preach a really low risk. Like I preach like $100, right? Like that's what I think most people should be out on, like a 50K. That's what I risk on my accounts, and I still make really good money. Like I'm up $3,000 times 5. Up 666.82 basically on the week. I haven't really posted a lot of content because I've just been like mental health's been fried. But like I'm up 6R in a week. That's $3,000 risking $100. well, $500, so 6R. That's a fucking insane amount of money. You don't need a lot of money. You need more accounts. You need more accounts. You don't need more money. You don't need more risk on the singular account. You need more accounts. Just go and get fuckload of accounts, and like that's how you scale. Because that little bit of money isn't a lot, but at scale, if I had 15 accounts, I mean, I just made like almost $8,000. But I had like 15 accounts. But anyway, what I was going to say before I got off topic is the $100 of risk. It's either should be 100 or like 1,000, or like very high. It shouldn't be this mid-level 200, 300. Like this is a trap, in my opinion. That it's like if you're really gonna push the envelope with risk a lot. Don't risk like a little bit more than like a little, because you're not making enough where it even matters. Like if you make 4R, 5R with $200 or $300 of risk, you're not making that much money. But if you have the losers, you're gonna feel the losers so much more than the winners with this. Whereas with this, if you win, you basically get to a payout in like a day. Like you literally get to your payout in like 2 seconds. Like, you know, if you took longs from here with $1,000 of risk, let's say, or like 500 or whatever, like a substantial sum, and let's say you scaled into this and you like, you know, we're in like 20 micros, like, and you know, you're trailing, like you're getting to your payout like instantly. Like, and like, whereas here with this, it either doesn't matter because you're making so much money, or it doesn't matter because the outcome doesn't matter regardless, because you can't lose the account. Obviously, I'm not saying you should risk $1,000 times 5. I'm also saying if you're going to do this, trade each account individually. I just think that this is a trap. The $200 to $300, $400 range with risk, I think, is a trap, because people can't trade. People can't stay level-headed when they're losing with this amount of risk. Whereas with this, you either lose the account really quickly or make a lot of money on the XFA. With this, you can just objectively trade. So this is just a trap, this middle ground trap. I think this is a trap, personally. Because very few people, I think, when they see well, I'll give you guys context. The mentee that I'm teaching, he had 2 losses and then revenge traded and made his money back. And I scolded the fuck out of him. Because I'm like, what is the point in this? Like, you could just be 2 losses down and not care. Whereas, like, with this, you're like, oh, my account's almost gone, I don't care. Or I'm like, why didn't you just risk the whole account then? If you're just going to risk the whole account anyway, which is what he did, he basically did that anyway. He basically did this anyway, except he didn't have as much upside if he actually won. Like, just being real. Because, like, with this, with this initial one here, like, with this here, he doesn't make much money, and then you're getting so tilted from losing because they actually feel it. Like, you feel it when you've got when your balance is 0 and you lose 2 trades, you're like, oh shit, there's like $600 missing from this account. When you lose 2 trades with $100, you don't give a fuck. You just don't care. And if you lose a couple trades with 1,000, well, your account's gone. I mean, you also don't care because the upside is so high, right? Like if you hit like a 2-3 to 1 risk reward with $1,000 or a whole lot of contracts, you're making like a payout basically instantly. Like, you know, and then you can de-risk after that. You can just go and risk like $100 or whatever you want to do. But I just think that this is really a trap, personally. Maybe, Foxen, maybe. How many coins are you in with that risk, Cons? Like it's like 1 to 4. I think this trade was 2 or 3. It's 2. I think I was in 3 on this one. So it's like 3. But then there's sometimes like with this, for example, with this trade, if you went long, this would have been like 1 max. I mean, it was like a 62-point stop, so it's 1 max. I just think, I think this is really important, and people don't talk about this. I don't really understand why people just trade in this weird zone. You don't make any money doing this, and if you ever go through any form of drawdown, you get fried. Well, most people get fried. Like, unless you're very psychologically sound, most people get fried. Like, this forces you to do crazy shit. I've seen it over and over again. Whereas this is just, I mean, these two are very chill in different ways. You either win or you lose with this one, and your pro account's gone. But if you've got the capital where you feel confident to be basically full porting the accounts, and then de-risking after you make some money. Like if you hit like this trade with $1,000 of risk, for example, like you'd be up like $4,000 basically. You know, so you'd be up $4,000, and then you just go to this after the fact. You can basically guarantee you're gonna get a payout. Or just like, you know, like that's the thing, right? Like if you want to risk this amount after you've done this. Like go from this to this, but don't go from like this to this, because the upside's so low. Because most people, even when if they've had a couple losses, if they're risking this, they're not going to hold the trade. They're going to be like, oh, I'm at break even now. They're not going to be like, hey, let's actually try and make money with like a whole lot of risk. Whereas if you go with this one first, you can always de-risk. I just think everyone should be sticking with the $100 though, personally. I think so many people are so hung up on like trying to make money quickly. It's like, bro, you can make so much fucking money. I made $3,000 and I took one position. I've taken two positions. I've had a 100% win rate this week. But like literally like one of those was that idiot fucking 1.5 hour trade, and then the other one was just like a 6 hour win. And I haven't posted about it because my brain's like fucking fried, and I haven't made like any content about anything. I've just been like sleeping all day. Just being transparent. My mental health's not very good right now. So, but yeah, like, I think that this is what people should do. I think this is such a trap. From experience, if I can afford to lose it, like, doesn't mean I should risk it. I don't have the mental capital for it. Sorry, I'm just reading. Short-term, so I can scale up. Not really short-term gambling. I think. I don't view sim farming as gambling. Like, I don't view it like if you have 5 accounts, for example. If you have 5 accounts. 5 accounts. Like if you, for example, can trade my strategy, right? Say you trade my strategy or any strategy. If you take 5 accounts and you hit like one on this trade, like for example, let's say you just took this. Let's say you went into the day, you're like, long bias, boom. We print. We make fucking probably like 5-6 grand on this trade. From, you know, that's one account. You have made back your entire investment plus you probably doubled your investment of what you spent on accounts from this one trade, and you have 5 trades or like a whole lot of trades. So you probably have like, say, you know, one, you know, let's say you have two trades per account. Like you're good because you don't have to hit that much to secure payouts. But I personally think the best way for you, and this is so short-sighted, it's just people being broke and wanting to make money, is when they trade like this. And they're doing it at huge scale. Like, unless you have real capital behind you to do this properly. Like, I know someone who has no Instagram following. He's like 150 followers. He made like $800,000 doing this crazy shit, but he has like a whole lot of capital to deploy. He spent like, 150K. So it's like, you spend 150K to make 800. But he's also buying, like, instead of 5 accounts, it would be like 50. Like, he has 50 fundeds per week, per month to trade. So I was like, like, I would think most people should just do this. And then, like, actually build up their capital. And then, like, also it's way less stressful. And most people can't afford to do this. Straight up. Like, this is expensive. I've got a lot of questions in my DMs that I've got to answer. Well, I already answered. Okay, so the question here is, I'm just going to copy paste it into the chat so you guys can see the question I'm answering in real time. This is the question I'm asking. Do I need to align stack order blocks from the 1 hour and 30 minute and 15 before taking an entry on the 5 or 3 minute? Yes. I would advise you to do that. And I think it was earlier in the call where I was talking about it. I mean, you look at, like, for example, this trade that we were talking about earlier. Even though this is shit, this didn't really. And the reason why I didn't take it was because it didn't have the hourly really. The hourly was like all the way up here, and like it had the 30-15. Like this is so loose though, and there's a reason why I didn't take it because it was like is this an order block, guys? Like it's like what the fuck is this shit? You know, like what is this? Like technically, sure, like, but like, and it did break structure, but it just was like, I was like, that's the reason I didn't take it. But like I like to have every time frame aligned. Also, straight up, my buys was just really short, as I said earlier in the call. But yeah, you want to generally stack them. So like, for example, the shorts earlier today, like off this one, I believe had them all. I didn't take this, but Minty took it. Yeah, it was like 2 out of 3. I would just say having 2 out of 3 is like a good idea. Like you want to make sure you also like the order blocks only really matter. Like the valid ones are going to be the ones that are aligned with the trend. Like even if it's just like the intraday trend, right? Like a bullish one's not going to work if the price action right now is not bullish. Like if it's not bullish, like if the and then like today, right? It was just like ranging basically. It's just about sitting there and going like, what's actually happening in the market, and like, are there? It's more like the 1 hour, 15, and 30 are way less relevant than like this. If you have that in conjunction with like the 4 hourly and daily, that's when you get banger trades. Like that's when you get banger trades. And I was talking about this earlier in the Minty live trading thing, where I was like, when you look at every order block on the daily, the amount of volatility and the amount of aggressive moves are so high, which is why I always try and capture those moves, because the strategy works best when it's trending. So if we know that, why would we not contextualize everything that we do through the higher time frame so that we can try and catch those moves, even if our win rate's low, like let's say 30 to 40%. Like we don't care because I've showed you guys this trade like a million times. This is one of the trades I took when the Discord first started, and I posted about it. Which I was like, okay, cool. Like when we were running down here, all I wanted to see was this liquidity get taken out, which is like the 4 hourly and daily. It has a 4 hourly order block as well inside of it, and you can see there's a 30-minute change of structure in here. I'm not going to go find it. There's a 30-minute change in structure and 15-minute change of structure. It retraces into it, gives you a 2-minute engulfing. You get a 14-hour run in like 3 hours, so it's like, okay, well, you're not getting that from the hourly. You're just not, unless you get lucky, unless you just also, but even in saying that, it also is like a lot of the time these, like for example, the longs today are also from like higher time frame stuff, like whether there's like the 4 hourly here. So I just always say have the best way to frame it is that like the 4 hourly and daily are like the frame of your trade is like where is it, and then like the 30-minute hourly 15 are like context of like what's actually happening right now, and then like the 2-minute and 5-minute or whatever time frame you want to enter on is like the actual execution. So like the daily and 4 hourly are going to give you the best frame for your trades, right? They're going to give you the best, like what the fuck is actually going on in the market right now. Like what, not right now, but like what's actually happening on like a higher time frame. Like what's actually happening. Because those are where you're going to get the volatility. Because realistically, like think about it, guys. Like if the market is eventually going to go up, like on a high time frame, we want to just try and find wherever that pivot point is. Like, because that's when the strategy will play out in terms of like scaling in terms of getting really high risk to reward trades. Like, yeah, you can still do well with like little base hits and little like trailed out wins and all of this stuff. You can still do really well. Don't get me wrong. You can still like make money doing that. Like I have the last 3 weeks where I've basically not held any kind of long form runners or anything. It's just been like taking little base hits order block to order block. But where you see a lot of the trades, where you might see my trades where I hit like like one of the last recaps where it was like 12R with no scale-ins. Like the way I do that is by going, how am I finding the pivot? What's happening right now in terms of the high time frame, and how am I finding a pivot to get into that move? That's it. Because that's how you're going to find it. Because think about it just logically. Like if you go short and the market's bullish, unless you like get lucky, realistically, do you think that that's going to be like a really big winner? It might still be a winner, but do you think it's going to be like a big winner? Do you think it's going to be one of these trades where, it goes crazy? Probably not, because the market's eventually going to go up. Like if we're nowhere bullish, like the market's going to go up. So you're obviously not going to get like high risk to reward trades in that, right? And then that doesn't allow you to like trail those positions and then scale into them. So it just kind of like neuters the strategy a little bit. Yeah. Yeah, I agree with that, Benny. That makes a lot of sense. All right, now on to the other question. I'm not going to type this because it's an easy question. When entering on a 5 or 3 minute, what is the minimum risk to reward? I don't have any fixed risk to reward. I trail my positions based off structure, and that's what you should do too. Because as long as you're aligned with a high time frame, if you target a certain amount of risk to reward, obviously you need to take structure into account and be like trailing more aggressively at certain areas depending on structure. But ultimately, it does come down to the more you have like a minimum or maximum risk to reward, the more you are stifling the potential of your trades. You want to be letting them breathe, because there's been trades where you guys can go look at one of my recent trades where I like took it and it was like I didn't sell it. I just left it alone. It was up 12 hour in like 10-20 minutes. So it's like, why would I have a set risk to reward? Just let it do what it wants to do. Trail structure. Like trail the structure of the market, trail what's actually happening. As long as you're aligned with the high time frame, trail it. And then see what happens as things develop. You can always make decisions on the fly. Which is why I also preach low risk, because then you're able to more objectively make those decisions. If a trade fails and price immediately makes another liquidity sweep, do I need a new? Yeah, always need, like the entry model is an engulfing candle plus liquidity sweep. You always need an engulfing candle. It's not just like, oh shit, it engulfed. Oh shit, it liquidity sweep. Or oh shit. Like you can't take those two things isolated. You can't be like, oh, it swept liquidity, but it didn't really give me any entry model. And you also can't it's like earlier what I was discussing with you guys, right? Where it's like the other mentee who took the short, and I'm like, well, this doesn't do anything. It's kind of like, this is kind of just nothing. There's no like structure really. Sure, maybe like a little bit, but like this just isn't enough. Whereas like here, on this trade, like I felt like pretty confident because I was like, okay, cool. Like this is a sweep inside of here. We've got like structure form. Like we've actually got we've had a fail. It's come up, tried to break the highs, and then actually dumped off meaningfully. And I was like, cool, I'll take that. Go to break even at the lows, good to go. Go to break even, we're good. Like, that's more of a reason to enter the trade. And that's what I always say to people. It's like, have reasons to not trade. Have actual reasons that you're in the trade, and have reasons that you wouldn't take a trade. So like, for example, I wouldn't take that because for me, it just wasn't enough structure. Didn't make enough sense to me. It was just kind of off nothing. It was in the void. This was not in the void. This one was like literally not in the void. This was in the 30-minute, 4-hourly, the whole lot of all blocks. This wasn't in the 30-minute. We swept. It's shown actual structure forming. There was actual reason to enter this trade. Whereas, yeah, this one played out and you would have made some money. Probably got stopped out at plus 1 or 2R, but like, it's not about what happens. Like, this doesn't matter that just because that happened. I'd rather lose because I actually had an idea of what the fuck is going on, or go to break even because I have an idea of what the fuck is going on, than make money and just it was luck. There was no like anything behind it. It didn't make any sense. Like the trade didn't make sense. It's better to lose and lose for a reason than to win with no reason. That's some real shit. It's better to lose and have a reason to lose than to win and just be vibing, because this isn't scalable. I can make money from this, sure, but it's just luck. That's scalable. That's an actual process that actually makes sense. And if you have that, eventually that'll play out over and over again. There's times where you'll go break even. There'll be times where you lose on this trade. But then there'll be times where you make a whole lot of money. Like the risk to reward for this trade was really, really good. And I was really happy to take it. In my mind, I was like, if this plays out, if this daily 4-hourly 30-minute order block plays out, and this is correct, and I'm right, it's 11 hour with no scale-ins. So, yeah, I'll take that trade every time, you know? And that was just wrong. I mean, that's why we protect our capital. That's why we go to break even. I wanted to see a big flush. That's why we always protect ourselves from losing, because I just want to like, all my goal is survival. I want to survive. I'll survive until this plays out. Like, I just want to survive until these trades play out, and then I'll make money. This is a hot take, and I don't think trading is about making money. I think trading is about protecting capital. Because if trading was about money, you'd look at big, like do you think that like at bigger firms and stuff? Obviously, this is a bit different, but it's still the same concept. Like at big trading firms, they're like, if you're making money but you're risking like all of the money in their account or doing crazy shit, the risk manager is going to beat the shit out of you. They're going to be like, what are you doing? Like, it doesn't matter, right? It's about like having proper structured risk and actually like not risking a whole lot of money and like, having high risk reward trades that make sense, taking risk off the table at levels that make sense. Like for me, it was here, and you can see all it did was sweep that and basically move up against me, and then I would have got cooked. So yeah, like that's just how I approach stuff from that, which is like, I'd rather scale. Like this makes more sense to me, is basically it. I don't have any more questions, unfortunately. Those are the 3 questions. How can I identify? It kind of goes back to the thing. It's just like the higher time frame. Just the higher time frame. Just always look at the higher time frame. Like the higher time frames don't fail much. Like they really don't. Like if you look at like, for example, like in this, structure here, like I'm always looking at the daily for the context. So like, for example, like for me, like this is my bias, even though it's wrong. I'm not gonna cherry pick and show you the ones that for me were right. But for me, this is where I wanted to trade from. I'm not going to cherry pick and be like, oh yeah, it was this one, because I was looking at it, but it wasn't my bias. So I'm going to tell you what I did. Or I just worked down from here. Found this order block in here. So like, for example, that was a 4-hourly. 4-hourly and daily, because you have this one here as well. So you've got multiple. And then you've got the daily. You haven't got the hourly, but you've got the 30-minute and 15. So there's always going to be some noise, right? But I mean, what I like to do is wait. Kind of what's happening here. I'm not saying you guys are going to put size on, but like I'm just saying that you want to start to see the market when it gets to these higher time frames, start to roll over and start to actually show you structure. Because so many people are probably getting cooked in shorts here. So the way that I identify it is looking at the higher time frames first. Go and look at the higher time frames. Go and look at what happens when a daily order block gets hit with a 4-hourly in it. The accuracy is very high. Let's just put it like that. The accuracy is very high. When you see a daily 4-hourly order block, like for example down here, you can see down here, this one pushes new lows, comes in, retests, boom. Like here, comes down, retests. And all of these have 4-hourly order blocks inside of the daily order block, plus like a whole lot of lower time frame ones. And if you can just wait until the market basically starts to roll over like this, and then just basically try and sell continuations of this movement, you can get a lot of really good trades from that. Because a lot of people, that's a problem. Like, they just don't have the patience to sit there. Like, even today, I mean, I waited 3 hours to go break even. Before trading, I didn't trade any of this. 0 of this price action. I waited 3 hours to go break even. And I was on that call with those guys for 3 hours. And all I did was, that was my trade. And I'm okay with that. You just gotta be patient. But most people can't sit there. I mean, what? It's 10:30 now? So do you think that you guys could sit there and wait for 3.5 hours, 4 hours for this to play out? And then you also have to wait for the retest? That's the problem. But people will be putting on crazy shit through here and blowing their accounts up and doing crazy shit instead of just waiting for the setups. Like what I just showed you, right? Just waiting for those higher time frame levels. Because it links back to what I said to you guys earlier, where it's like the actual moves that are going to be the ones where the strategy shines is going to be the ones where you do wait for that stuff. You do wait for those higher time frame pivots to actually play out. Because that's when you make money with the strategy. Because it won't be like this, generally. It won't be like this. It'll be like this. It'll just dump. And you can see that. Case in point. Case in point is like here. Where is it? Sorry. here, which is like the daily order block. This is the daily order block retest, which is this one here. So this retest here. Right. So like you can see when you're trading from actual structure, like proper structure, like this is essentially the biggest levels you can get to apart from the weekly, right? Like when you trade from that, the market doesn't fuck around. Like once it's moving, it dumps. This is what you want to find with the strategy, because if you can get into this trade, go stop loss to break even, and be fucking aggressively trailing and scaling into this position, you will make so much money on a move like this. Like, and yeah, there's like this isn't happening always, but like it's fine. Like you're not trying to catch this move every single time. You're just trying to put yourself in the position to catch this move every time. And then like the worst case is you get stopped out at a small winner. If you can eliminate big losers and just go, okay, well my meta, the meta of my system is small losers, small winners, and really big winners, you'll make money. You will make money. If you can just detach from the process, which is difficult, don't get me wrong, and then just trade for the process of this process, because that's the thing, this is why I like my strategy personally. It's because most strategies have like very low upside. They'll be like, yeah, woohoo, some shit. Let's pretend this is like a fair value gap or something. I don't know. They'll be like, yeah, like I'm making 3R. Yeah. And I'm like, okay, great. Like that's cool. But with my strategy, I'm like, I have the potential to make literally unironically that. Or I have the potential to make 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 that. Like it doesn't matter. The trailing system allows you to just be chilling. Like whatever happens, happens. If you lose, if you go to break even, you go to break even. If you make 5R, you make 5R. If you make 100R, you make 100R. Like the biggest trade I've ever been in a position and managed was 44R in one trade. And that trade, if I had stuck to the rules, was very similar to the price action you're seeing in front of you, which would have been 142R or something like ridiculous. Or if I had just stuck to the strategy and traded the strategy as I intended to, which is just basically trailing protected highs and protected lows, I would have made 144 out. But like no, that's why I like my strategy, because like the average winner is pretty high. I mean, it's anywhere from like 1 to 3, but then you'll get these like random ass wins that are just fucking huge. And they allow you to kind of detach. Well, for me anyway, I'm not sure. A lot of you guys seem to. They allow me to detach a lot more from the process, because I'm like, I know those are around the corner. I haven't had a big winner in a hot minute, in like a couple weeks, 3 weeks. But I mean, suppose I made 6R a couple of days ago. Sorry. So yeah, how do you scale into your position? I'll show you the way I scale into my positions. The way I scale into my positions, or the way you should scale into your positions, because those two things are very different. I'll show you both. Actually, I will show you both. I feel bad not. So let's say we take these longs that I was talking about earlier. It's a good example. So obviously you go to 1R. Like the strategy is basically like internal structure. So this will be the first internal structure. But that's too far away. If it's too far away, so if it's like more than 1R away, like the next level of internal, like of liquidity, whatever you want to call it. If that's too far away, you're always going to 1R. If it's too close, so like in this trade here that I took, it was too close. So I just went, for example, like here was, I think, like 0.8R. So it's if it's anywhere from 0.7 to 0.8R, to 1, like you just go to the structure. So like, for example, it looked like this, right? I was in like here. So like here it would have been like, it's a little bit down. So for here it was like 1.8 because the structure was a bit close. So it was like not 100%, but you'd still do that. But if it's over If it's over, you just want to just do 1R. If it's over. So the way I would trail this is that basically I'm always just looking for it to pull back into some sort of low time frame new order block, right? So for me, I was talking about this. I don't think there's anyone in. Is there anyone in here in the call? No. Unfortunately, there's no one in here in the call that can confirm this. It was in the thing. But I was saying to them, I was like these levels down here, right, are like quite promising because they're just basically new order blocks, right? But they're on the 2 minute, and then you basically just want to see how price action develops. So you just want to like watch. You want to wait when I'm trailing. I'm basically going and looking at where the new order blocks are forming in my brain. Like what do I believe is going to happen? So if I believe we're bullish, like these shouldn't fail. Like in your brain, like these shouldn't fail, and if they do, I don't want to be in the trade. Like if these do fail, I don't want to be in the trade. This is just the way that I look at it. And then essentially, like once they hit those levels, if you see a rejection, like I was talking about the scaling on the call, where I was like, I like to do something different, which I'll show you after, but you shouldn't do this, and I'll show you after. But like I would just scale in like that. Right? I'd have my stop loss here, where I might make 1R if I lose. So I'll like add enough contracts where. And then put my take profit here, my stop loss here, and it'll basically be like $100. So like the worst case here is that it comes against me and I get knocked out of that trade and I make $100. The upside here is that I make like 1.9R plus whatever this extra is, which is generally probably like 2 or 3 extra R. So I'm making like 3.4R plus 2.6 of this. So that's also probably like, yeah, it's probably like 9R or so. I don't know exactly how much. I can't do the math really quickly. And then you just trail protected light. Like for example, here, I would have just been trailing all through here. You can see when it pushes off, just trail. When it pushes off, trail. And you'd still be in this position. There is no protected low apart from here. So you'd still be in this. You would be in this from 7 o'clock until 10:30, just trailing, you know? But you'd be up so much right now. You'd be up like at least 8R, and you might have your new predicted low there. So if that fails, like you just get out and you'd be getting out at like 9R. But like that's, you know, there's obviously not every day is going to look like this. It's going to be like days like today where I was just wrong, right? But this entry here is the same as this entry here in terms of methodology. It just was I just had the wrong bias, but I predicted myself and, you know, I don't get cooked. But then when I'm right and the market's telling me I'm correct, why the scaling is important, and the market's telling me I'm correct, I'm pushing the envelope. I want to make more money when I'm right, because the days when I'm wrong, I'm generally break even or maybe like 1 or 2 losses. But then when I'm winning, I can make even more money. And obviously sometimes these days you're going to get hit out at break even and get cooked. Like 100%. But like that's okay. Like that's fine. It's not about a day-to-day trading. Like, because this will still be like, we say get cooked, but I mean like making 1 hour on the day is great. That's what a lot of people are trying to do with their normal strategies. And your like worst case position in a winner is that you have what a lot of people want to do, which is like hit like 1 to 3R. You know, a lot of people are doing that. So our worst case is a lot of people's best case. And then our best case is like make like fucking, you know, this could just trend the rest of the day. Who knows? This could just rally. You know, who knows? You know, you don't know what's going to happen. So, you know, you could be scaling and you could have scaled in like, I'll show you the way I scale in now. Does that make, before I move on, does that make sense? You're basically taking predicted lows or predicted highs and just trailing them and then using the structure the same way we find entries here on the high time frames. We're using the lower time frames to kind of try and find continuations of that trend. Does that make sense? Does anyone have any questions about that? Because that seems like a big point of people not understanding, people not really getting that. Does anyone have any other questions on that one? You have more questions? All right, shoot. How do I know which D? Which D? What do you mean? Oh shit, sorry. My fucking thing wasn't loading. How do I know which? You don't. The answer to the question is you don't. If you're wanting to know with certainty, if you ever get to that point where you guys are certain, please let me know. Because you guys will be on a fucking super yacht and I want to be your friend. You'll never know. The thing is, you need to accept the fact the market the market in every capacity is completely you do not know what's going to happen. You don't have any certainty in the market. It's all probabilities. It's all going, hey. Like, you can go, hey. For example, that's like, the only certainty we do have is the market trends in certain directions, and like you can pretty much presume, unless there's macro catalysts, that the market's going to continue to go up. Like, unless we get told pretty explicitly the market's going down, presume the market's going up. Like, that's what I do. So in those times, like, push it. Like, if the market shows you trail it. Like, there's going to be times where you trail it and you get knocked out. There's going to be times where it just rips. But you can never know with certainty. And if anyone's telling you, even ICT, where they're like, it's 100% certainty this is going to happen, I'm like, that's just bullshit. There's just no way that that's the case. And if they did have that, and if you did find that, and if someone did have that, they would not be talking to you guys about it. If they had 100% certainty, they could always be making money. It's just absolutely ridiculous to even think that that's a possibility. There's definitely a way you can make money over time, but that doesn't mean you're going to be right every single time, or 100% execute every time. Like in the way that you guys think that certainty looks. I'm fairly certain now. I'm like, not certain, but I'm like pretty sure I'm going to do this forever. But like, I don't have certainty that every single trade or idea. Like today is a great example. I fucking thought we were going to go. I thought we were going to dump off. Completely incorrect. Completely wrong. That's okay. When I'm wrong, I'm not that wrong. I still technically made fucking 20-piece chicken nuggets for the day. You know? 5 accounts, $3. Go buy some chicken nuggies, you know? It's fine. It's not the end of the world. You know? My bad day is $3 break even, which is generally how it goes. It's either one loss or break even, or maybe like 2 losses on a really bad day. That's that's fine. I'll take it when my good days are like 10 rippers like this. And like this for me would have been way more than what I'm showing you. Because what I do, and I'll show you now, is I fucking will mark this kind of structure up, and I'll go to the 15-second chart. Do not do this. If you try and do this while you're learning the strategy, you're going to get fucking fried. So I'll go to the 15-second chart, and I'll find shit like this. Imagine dumping a fuckload of contracts after you see liquidity sweeps like this, and trading that. That's what I do. So I wait for the structure to form inside here. I wait for it to get swept out, and I wait for new engulfings to form, and then I send like not like the absolute max contracts you can, but I will like basically make it so that like my 1R is here, and then like my scale-in's like here, or like here, for example. Like this is like a good example, right? Like I'm just looking to find, like I'm just on very low time frames when I'm scaling in, but I'll find structure and basically be, because the risk to reward becomes absolutely absurd. We are like, okay, this is like literally like, if you're trailing this is like 10-1 in 10 minutes. But I don't mind if I just go, you know, cool, I was wrong, I make 1R. That's fine. Because the risk to reward upside here is way more than what I'm showing you guys, because this is a lot more advanced, and I've been trading strategy for like 3 years. Whereas like the upside for me is like this trade with scale-ins is like unironically like 25, 30. Like if I catch this kind of trade, I'm just making an absurd amount of money. And you can just trail, right? Like it's the same principles. You're just trailing on the lower time. Protected highs, you can see. Like look, protected highs, cool. Predicted lows, protected lows. Protected lows, protected lows, protected lows, protected... Where's the next one? Protected lows, technically. I mean, you could kind of argue that, I suppose, but I would probably wait, you know. Yeah, I mean, you're probably getting trailed out here, like, maybe. Let's just say the worst case. Let's just say the worst case is, like, here. Like, cool, dude. You just made 10R on, like... You probably just made, like, 30, like, 20, 30R on this trade. That's what I do, you know. And this doesn't play out that often. Like, I mean, I don't have that many massive winners. I probably have like 10 to 20 a year, maybe, if that. But they pay for my whole year. Like I've before I ever made content, I was posting, like when I was posting on my personal Instagram, just literally talking about my trading to my friends and stuff. Basically, I was posting trades where it wasn't exactly this. I was still this is more with NQ, but I was trading copper, and I would be scaling into positions quite aggressively. It is more advanced. The scaling and stuff is difficult, guys. I'm gonna be real. Like it's not easy. Even the basic scaling is difficult. Like it's hard. It's hard to mentally do. To be honest. So I'm just reading this. Do you only trade specific times, or do you? I only trade New York Open NQ right now. But I've traded copper during Asia, and yeah. Let me just... Sorry, people being fucking racist for some fucking reason in the goddamn Discord. People pissing me off. Yeah, I would trade... I mean, I don't even really trade the Open that often, really. I trade like an hour after the market opens. I just chill. I want to see the market settle into some sort of, give me some structure to go off. The Open's just very aggressive, and like I can't manage risk a lot of the time. Did you not hear me? I just said I don't trade the Open that much. The Open's fairly aggressive, and it's quite. The market hasn't really set a tone of what I think it's going to do, so I don't trade the Open too much. Sometimes though, just not a lot. But I always trade generally like 6:30, which is bell ring, until like at least a couple hours. I finish trading pretty quickly. Yeah, what Benny said. This is too much chop and shit risk to reward. That's the realest shit. It's just really bad risk to reward unless you're trying to catch bottom top ticks, and it's not ideal for anyone. I just don't think it's a good idea unless you're trading ICT, because ICT use a lot of like fair value gaps and stuff, so you're catching quite like sniper moves where I don't do that. I catch like the engulfings, which means that like a lot of the moves already happened. In general, I mean, I think you can trade the strategy with any time frame, man. Anytime, just in general, man. Just whatever you want. I've traded it in Asia, London. I've traded it in New York. I've traded it in Forex. I've traded it on the owl, on the daily and on the weekly chart. It's all the same concepts. So just about most of my strategy is about structuring risk and trying to find a trend. It's really it. It's not like it's like some crazy shit like SMTs and all this shit. It's not really about that. I've found my strategy is pretty basic. Just find areas where the market's moved before, wait for the structure to form, wait for you to actually get some sort of confirmation that's with the trend, trade it, and then trail it, and then add to these winners. That's it. That's the basis of the strategy. Then those concepts can be applied across time frames, across sessions, across instruments, across everything. It's not like it's some crazy nuance. There is a lot of, it's not as basic as that, but it is sort of as basic as that. Essentially is that. But I mean, if I was just learning to trade, I probably wouldn't trade NQ if you were just learning to trade. I would trade gold or something. Or like, maybe not gold, but like, gold. Like NQ's like very choppy. Like, it's just very like annoying to deal with. Like, it'll just do this a lot. It'll do this a lot. But like you'll get it more look like this. Like it just retraces a lot. It takes you out of these fucking trades and then runs. You're like, cool, dude. That's sick. Like the worst I ever had was 8 break evens in a week. You're like, okay. Cool, dude. Sick. Yeah, ES might be a better option as well. I've never traded ES, so I can't speak that the strategy works. But I mean, the concepts work. I mean, like they're not even really like concepts. It's just like, don't be an idiot with your risk. Scale into winners that are aligned with the high time frame, and like have some form of basis. I mean, I think that even ICT. ICT, if you scaled into winners, I think would be even better. Like, than like a lot of these. I mean, you can see it. A lot of you guys, I'm not sure if you follow JCap. He's the biggest payout in prop firm history. He trades ICT. Do you know what he does? He scales into winners. All of the best traders that you look up to, maybe you don't look up, maybe you guys don't even know of these people because they're like pretty low key. But like a lot of like the best prop firm traders, like the guys who are actually printing, like actually doing crazy, like the guys who are like Trader Kane, another guy. Do you know what he does? Scales into winners. All of the top traders that you look at who are actually like, not like, I have a Bugatti, please buy my course. The actual guys who have verified payouts. The guys who are actually printing. And I'm not saying I'm that person. I do really well with the prop firms, but I'm not at the level of a lot of the top guys. Those top guys are all scaling into winners. They're all going to break even very quickly. They're all doing what I talk about. If you don't want to listen to me, go listen to people who are making $2.5 million from Apex. Go look at people who are making $1.7 million from Apex. If you don't want to listen to me, go listen to them. You know, like it's the same shit. Like if you want to look to the top end, highest end of trading, biggest prop firm payouts ever in history, those people are doing a lot of the same. Like Trader Kane talks about, he's like, all I want to do is get into a trade and get my risk off the table as quickly as possible. He made $1.7 million with Apex. Like, if you don't listen to me, listen to the people who are actually at the top of the game. And these people are saying the same thing that I'm saying. And that's really it. And they trade kind of similar. I mean, I take a lot of the same trades that Trader Kane takes. I always like message my wife about it. I always laugh because he posts his executions on a story. I'm like, lol, we took the same trade. We don't trade the same strategy though. How do I manage stop loss? I just manage my, I put my stop loss below I just kind of talked about it, but like the protected lows, which is basically just like a new engulfing. Like when it's kind of confirmed, like here, you're just putting your stop loss there. Even if it isn't confirmed, you know? Because if this fails, generally speaking, it's going to fall over. Like if the momentum shifts, like if the momentum starts to really form lower lows, like it's probably going to fall over. You probably just want to be out of that trade completely. But you guys see what I'm talking about, right? Like we're like, you can see these like engulfings really do pay because like they don't really break below them often. Obviously, these are really overextended ones are a bit different because they're like at the top. But if you have some form of just, you know, like any form of, you know, market, you know, when you see these pushes, like it's pretty easy to trail. Like in trades like this, when the market's really trending. Does that make sense? Where you're like looking at like the protected lows and protected highs, which is basically just essentially where the market's like pushed. So like for example, if the market pushes here, this would be like a new protected high, a protected low, sorry. And then you're just, you know, they're here. Like I like to use engulfings. Like I like to use literally like new order blocks is basically like a protected low. So like this is for me a new low, a new protected low, because if this breaks, I don't want to be in the trade. Because it's a new order block technically on like a really low time frame. So that's how I trade. So I'd be like, here is like not a lot. Like potentially here, like that, like potentially maybe this is a bit loose. But even so, I mean, even so, let's just pretend that's still like 3-hour trade with no scale. And so if you're scaling in here, like I explained, you're still making like 4 or 5 hour on that trade. That's great. There's nothing wrong with that at all. It's not going to be a home run every day. You're not going to be making 20 hour every day. I see Benny typing. Does anyone have any questions? Specifically on anything? If you guys need me to go over anything, I want, like, please make this clear. These calls, be annoying as fuck. I feel like I don't get this, bro. Like, explain this shit to me again. I'll explain it to you again. I want you guys to understand. So, like, not annoying me and asking me questions is more annoying. Because then you're going to ask me down the line. So I'd rather just get it out of the way. If you guys don't understand it or I didn't explain it well, Be like, hey, bro, because I'm still, remember, I'm still learning as well. I'm just learning how to communicate and teach you guys. So if I'm not doing that right, not able to help and not able to give you guys good advice, or not be able to communicate the advice I'm trying to give you and teach you, then like just tell me. Be like, hey, bro, like I don't get this. Like, can you like clarify certain things? Because if I don't know, how can I help? And these calls are for you guys to get better. So if I can't clarify, then like I need to be able to help you guys. And it's more annoying if you guys don't ask, and then like you ask a couple of days and I have to answer the same question. I'd rather just get the question out of the way. Also, there's probably a lot of people at home who are watching this, you know, like in like later on tonight when I post it, who are like, I don't get this, and you might ask them a question they were wondering, and then that's like one less DM that I have to deal with. So if you guys don't understand, I can always go over it again. What do you think on injury? Yeah, I entered in the 15-minute OBs all the time. I have people who are trading the 5-minute and 2-minute order blocks with 15-second rejections in the mentorship making money. Let me put it to you like that. I've traded the strategy with the weekly order blocks, with daily and 4 hourly. I can't believe you're up 23R. That's insane. But I have people trading the strategy at every time frame. You can trade 15-minute order blocks with 2-minute, 1-minute executions. I would say always have 2 sets. I'd always have 5-minute and 15 aligned with the time frame, or like the time frame. Like the lower time frame you get, the less relevant the higher time frame context is. So if you get to the point where you're trading the 15-second chart, the daily no longer matters. If you get to the point where you're in the 30-second chart, the daily no longer matters. Right? But if you're in like the 5-minute or even like the 2-minute and you're using 15-minute structure to kind of give you context on which way we think the market's going to go, then of course you don't want to do it. Because again, see, hey guys, this is like a really good example of why you wait. Just fucking relax. Fucking chill. Because you would have gone, okay, bro, I'm a fucking short here. I'm going to short this retest. You didn't get an entry, so you wouldn't be shorting the retest. This is why I'm saying be patient. Just chill. Because you could have gone, there's no entry through here, right? And then you wait for market structure to actually shift in the direction that you want it to shift, and then you wait for a rejection. There wasn't one. So you just wouldn't trade it. So you're just good. And then you avoid yourself losing. I wasn't even paying attention because I was talking to you guys. But like this is exactly what I'm talking about. There's times where, you get this shift down, and realistically, like, if you're going to catch the pivot, it's going to retest and give you a meaningful rejection. But if it's not going to retest, it's going to... I said this earlier today, where I'm like, I believe this is just going to keep rallying all day. Because if the market's... Like, you want it to show you its hand before... It's like, you want to show the market to... Because a lot of people will just start taking 2-minute engulfings. They'll just buy 2-minute engulfings, and then I'm like, bro, this literally isn't relevant. Like, a 2-minute engulfing isn't relevant when the market looks like this. Like, it's only relevant when you've actually got structure to go off. But if you don't get that, it just saves you. Like you would probably just be like, I'm done for the day. It's 10:41. I've got an hour and a half, 2 hours and a half left in the market. I'm done. Like, I'm not going to sit here and just watch the market go up. Like, I'm just done ski. That's my setup. Like, if I was looking to go short today, meaningfully, apart from that last trade I took, that I would be from there and I'd be done right now. I'd be like, there is literally no entry here. This market does not want to go down. The writing is on the fucking wall. I was wrong about my bias. Cool. We come back on Monday and we just completely reset and get back onto it. It's fine. It's okay to be wrong on the day. Just don't let your account get fucking fried from it. Don't do crazy shit. Just be like, cool. Break even on the day. We walk away now. Like, whatever. It's not the end of the world. It's not like we're going to die because we didn't make money or lose money today. Does that make sense, though? Is that making sense to everyone? I don't really get the part about finding height. I get with finding quality in which solution to it says something about high time frame. Yeah, high time frame alignment. You want to look for the high time frame. Like, Look for the high time frame, like what's happening. Like, for example, today, right? If we look in hindsight, let's look at hindsight, right? We've got 4 hourly order block here. We've got, like, sure, we could be like, this is like an hourly order block if you really wanted to. Sure, technically. You know, you could argue that. Sure. I probably wouldn't. But you could be like, yeah, we've got like 30-minute structure in here. This is a bit loose. The problem is that there was just really no trades. This was really just like a no trade kind of day because it just wasn't enough for me to go off. The only thing that I could go off was this 15-minute order block right here that produced this move and this liquidity sweep, which is, you can ask any of them. I'll tag them to confirm that this is the only thing I was looking for, which was like this 15-minute order block here and this like 30-minute order block here, and then this liquidity sweep. You want to find order blocks that have driven the market in some capacity. So, like, for example, if this drove this long, and you also have higher time frame bias behind you, which is what I said to you, right? Like, the market's pretty bullish. You want to find those order blocks that are aligned with the high time frame. So, like, for example, here, you've got this 4-hour base, basically, to play from. Because you're like, okay, well, we believe the market's going to go up. Like, if you believed, like, I didn't. I was wrong, right? But if you did believe the market's going to go up, this isn't a 4-hour base, and then you basically want to go and look at where the liquidity is, which is like, for example, for me, I was like, this is where the liquidity is, and like through here is where the liquidity is. So I'm like, well, I'm looking to see that get swept, and then like into like a lower time frame stuff, like the 15 here and the 30-minute, and then waiting for a 2-minute shift, and then we got that, and then we would have entered that and been trailing that all day. So you're just looking at the hourly, the 4 hourly, sorry, and the daily as your market context. Because what I thought was going to happen is we were going to come and test this bearish order block, because it was like off this and there was a lot of movement now. And I thought we were going to move down to here. I thought this could be a really big day, sure, but I was just wrong. But that's how you do it. You always need to look at everything through the lens of the higher time frame, and then find how the lower time frames interact with that. So, like, for example, what I just showed you. Like, find the internal liquidity, find the order blocks. Like for here, like this one, I've got this expansion, even though it's really shit. This is really shit. Objectively, this order block is trash. It's theoretically valid, but the only reason I didn't take it is because it is shit, and because I did think that we were going to go bearish. I didn't really want to get into longs, and I thought I had just missed. I thought I had missed shorts over here. Thought I had missed this, but a mentee caught this, and I told him, I was like, just chill, bro, like hold it, this could just go down. And he ended up selling down here and passed his account with that trade. But that was just from the hourly, right? Because it interacts with that the hourly there, this order block here, that is linked into this order block here, which is the daily, which is the higher time frame context, plus the daily, plus the mid-level stuff, like the higher time frame, like where do I believe the market's going to go to, and what do I think is going to happen, and then using the 1 hourly, 30-minute, and 15. It doesn't have to be all three. It's ideal if it is, and then using those time frames to set the trade up, and then using the 20-minute to execute, the 2-minute to execute. Sorry, brain's not working. Does that make sense? So, okay, no, I'll go over it in a second. Yeah, it's just order blocks inside of order blocks inside of order blocks with a high time frame narrative. That's it. That's literally it. Like that is the strategy. It's like order block inception. The biggest takeaway here is to try to identifying the trend is the most important thing, right? And if you're not with the trend, the strategy is not going to be very good, because you're trying to catch. A lot of you guys know what pivot points are in the market. Like pivot points, you guys know what pivot points are? Shall I explain that as well? Yeah, so like a pivot point is basically a point where the market turns in a direction. So like it goes, like we start to go long, and then it's like a big expansive, what do they call it, distribution, where it just fucking sends in a certain direction. Those are what we're trying to find, because if we can find those are the trades we can scale into and make money from, and then trail. because those don't move with a lot of pullbacks. They move aggressive. You guys can see this. Like this is a distribution leg where all we did was come and tag and boom, rip. And you don't really get ever taken out of them, but it gives you infinite opportunity to scale in, and then these trades become very big over time. And then you can kind of just chill. And there's going to be times where you get into these and it's just not that at all. And it's just like a little winner or like a little break even or like a little, whatever. But that's okay. That's okay. Not every trade is going to be, it's not every day you're going to be Benny ripping 22R out of the market. That's not how the strategy works. And I don't claim that that's how the strategy works. It's definitely not the case. It's not as many people as last time. Maybe it's because it's Friday. Should I go short here, bro? Should I just send short? Should I go 5 minis short? Okay, I'm not doing that. Okay, so when you say I'm linked, okay, so I'm just answering you. So okay, for the 15-minute OB, you also use the 5-minute OB delay on top of each on the 1 minute to 30 seconds. There's no point. Yeah, there's not a whole lot of point to look at those higher time frames. I'm not sure, is he still in here? I think he's gone now. Fuck. But yeah, there's not a whole lot of point in that. Is he? No, he's gone. But yeah, I'll go over your trade now. Sorry. Let's go over the trade. Where did you post it? Is it in... Can you repost it? Do you still have the screenshot? Can you just chuck it in the chat? Do you still have it? Or I'll go find it or something. Just don't know where it is. I don't know where you posted it. I didn't save it, sorry. I will say, guys, I am coming around more and more to the idea that this strategy is not very beginner friendly. As I teach more and more people. Unless you have, like, a lot of intensive help, it's kind of difficult. And also, like, the psychology side of it is tough. Like, going to break even, like, understanding, you have to be like me where your mindset's pretty fucking rock solid. You just don't really care about what happens. But the upside... This is the thing is, like, my upside, and like Benny you can see from Benny, I don't think he trades exactly the same as me, but he trades very similar in terms of like scaling in and everything. Like the upside is so much higher than normal trading. Like you look at like ICT. I mean, the ICT. Show me an ICT making 22R in a day. Yeah, of course. I like hanging out. I like hanging out with you guys. I like talking about trading. I like. Sharing you guys, giving you guys advice and stuff, and best that I can. I get some enjoyment out of this too. It's not just one-way street. I said this on the last call. Definitely enjoy talking to you guys. I mean, it's a free resource, right? I mean, you guys get to talk to someone making money trading for free, So, and I get something out of it where I get to talk to you guys about and explain stuff, and I get like community, and I don't have a lot of community with my trading. For the first 3 years of my trading, all I did was sit by myself. And I'm not trying to be like that's depressing, but I'm just being real. Like just sit by myself and trade. I didn't have really anyone to talk about it to. So I also get a lot of enjoyment. This isn't a one-way street. I mean, the easy ones. I mean, I actually disagree. Moving average crossovers, you could probably make money with. People just trade them. Like if you did that with scaling in, you might be able to. The thing is, it's like the problem, and I find this, and this is the 100% the realest take in my opinion in the world. People do not look at trading in the way they should because they never have context. Because you know how you can tell people don't actually have context behind how they trade, and they're not actually looking at the market and actually trying to figure out what's actually happening, is when you post live recaps of you trading, and people try to tell you that it was a bad trade. I'm like, you have literal zero idea from this video of why I took this trade. You just see price action. Okay, well, price action is like probably 50%. You know, it's probably 50% of what real trading is about. It's more like, what's the context of the market right now? What am I actually thinking about? Like, what's actually happening? What is the narrative that I've constructed in this trade idea? But then people come on and go, this is a bad trade because you had a loss. Or like, this trade's aggressive. This trade's XYZ. It's like, you have no idea why I'm taking this position unless I tell you explicitly. So how can you come to that conclusion, right? Whereas if you take like moving crossovers, moving average crossovers, and you actually apply context and narrative to that and scale in, I guarantee you probably can become profitable with that as well. It's not really about the strategy. Like in retail stuff, it's really not. Yeah, you need the market context. You have to actually understand what's happening. Like, for example, like my market context today was just wrong, right? But my narrative was like, we're testing this OB, blah, 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 blah. And it was just wrong, right? That's fine. That's fine. Like, but here, the same shit. Like, he's like, okay, well, we're testing these order blocks for medium time frame bullish. As you can see, like, we're testing this 4 hourly, boom, boom, boom. Like, you've got that narrative there if that's the narrative that you've constructed. But most people don't have any narrative when they trade. They just like see a pattern. They see a pattern. If you trade any strategy, like ICT, anything, just based off like, oh, this has a fair value gap, and like maybe one other thing, that's just pattern trading. That's just literally the exact same thing as like trading like a fucking Head and Shoulders. It's the same shit. If you don't have any context, you're not going off structure, you're not understanding overall market narrative and sentiment and like the actual constructing an trade idea. Like, it's the same shit. It's the same thing. It's the same thing as trading a Head and Shoulders or like a what other patterns are there? Like all that other shit, like that people do. I don't remember, like falling wedge and shit. It's the same thing. But then again, if you trade Head and Shoulders with narrative, it's probably profitable. And you scale into it and it's based off like higher time frame trends, maybe profitable, Like you might be able to make money doing that, Who knows? But people just look at people trying to make trading too easy. I'm like, bro, you're like literally trying to do something really hard. Like, of course it's going to be difficult. Of course it's going to take you to actually think. Do you think you can just press buy and sell and make like $1 million? Get a grip. I'm not trying to be a dick to anyone. I'm just like, get a grip though. Like, realistically, do you think that you're going to be able to make like, I made like $200K last year. Like, do you think you're going to be able to make $200K just by buying and selling engulfing candles with no context? Like, come on. Like, without thinking at all, like without just like learning and like, getting in the trenches and understanding why you're taking these trades? Probably not. But I think that applies to every strategy. That's not just mine. That's like ICT everything. You've got to have the context behind the trades. That's why I find these silly little strategies I see on Instagram and YouTube and stuff where people are like, this is the way you trade, and it's mechanical, and like there's no context, you don't have to think. I'm like, that's just... If you had something that could beat the market and it was that simple, you would have sold it and you would be in the Mediterranean driving, sailing around on a yacht. You wouldn't be sitting on YouTube talking about trading. You would have sold it. If you had something that was that mechanical, you just wouldn't. You wouldn't be. Yeah. Yeah, exactly. Yeah, for sure. Yeah. I'll see you guys on Monday. We'll be doing another call on Monday, so they're on Monday, Wednesday, Friday. Let's come ask any questions you guys have. Yeah. My girlfriend gave me a hard reality check when I started. You're just not going to start. Yeah, it's like, do you think Kobe, it's like, I'll use the same analogy I used. Do you think like Kobe and stuff, all these guys, right, who are like getting, all these like high level performance based individuals who play sport, like they spend years and years and years and years training to get good enough to have these contracts where they make like $100 million a year, or whatever they make, But like that takes time. It's like to everything, like that takes, it's a skill, right? So why would it come easy? Obviously it can be made easier. There's things you can do, but it's not going to just come easy. It's not going to be like an instantaneous thing. I definitely think having the right information can like expedite the process, definitely. But like you still have to learn it. You still have to understand what's going on. Here's the trade. Okay, cool. this link. So yeah, like the only time I basically remember looking at this trade and like the only thing that I would have done in this trade is fine. The supply zone's good. Everything's great. The only thing here that I would have done is this isn't where my entry would be. This is where my entry would have been. Like if I was going to take this, I think realistically I would have ended up taking it here. Like this candle just here. You guys can see my cursor? This is the engulfing that pushes this move. But this take profit's good. Even this take profit, I mean, like you get a lot of scale and opportunities through here as well. But this is fine. This trade is like got an actual like, yeah, it's fine. Like I think that this trade is fine. Like you've got the structure formed. You've got an actual reason to enter. You've got the 5-minute OB. I think you bought the retest of the actual engulfing. So I mean, I can't see every time frame unfortunately, but it makes sense to me. Like I would take this trade potentially. Depends if what the higher time frames look like, but I presume this is bullish. Is it gold? So it's gold. Yeah, it's gold. So we're bullish as fuck. So yeah, I would definitely take this. 100%. So I've only been moved to live one time with Top Step ever. It was in November last year, and I just ended up trading it and then taking the balance. But I don't really care. My actual live account's so big now that I just don't care. It just doesn't really affect me. But I think people are worried about being moved to live and they're like not even good at trading. Like no offense, but I'm like, just worry about it when it happens. It's like people would ask me about like tax implications of trading. I'm like, just make the money first. Like make the money and then worry about the tax. Don't worry about the fucking, stuff that you're not even at that point of worrying about yet, All I'll say, and I think about like a lot of the props, is that you need to hedge your risk a lot. Like get a whole lot of prop firm accounts. Like get out of the mindset of wanting to just trade with a couple. Or like with one. Yeah, you can wait for the retest. I think both trades are valid. I just also am more aggressive. I've got more equity though. Like I've got more, like when you're building up a top tip account or anything, you want to be fairly like, what's the word? Like risk off. But like when you've got a whole lot of equity, you'll be more aggressive then. And I'm really aggressive a lot of the time. That's why I trade lower time frames. Because the risk to reward, like if I'm risking equity that just doesn't matter to me in any capacity, I just don't care. Like it just doesn't matter, right? Like if I take a break even or something, but the risk to reward upside is so high. Yeah, I mean supply and demand, it's the same thing. It's the same thing. Like, that's fine. Like it's not specifically where you're trading from in terms of like you can do what you did and that's fine. It's just looking where did the market expand from. Because generally the market where it expanded from, there'll be an order block and supply and support and resistance, everything. There'll be everything that there'll be fair value gaps. There'll be like everything. Like those areas will have pretty much every strategy that you can think of. There'll be some sort of model in there. How much are you up on Benny, how much are you up on your fucking accounts now? When you up like 15 grand or something, you made 20R in like the last couple of days. Yeah, that's basically what I do, man. Like, yeah, up 25k. It's pretty fucking good, bro. That's sick. Good job. Sure. So I would have loved to see this. You see where there's low? Can you see my cursor? Presume you can. So this low here, I would have loved to get swept. I would have loved for this to get swept and then run. Like this being slightly down under here A plus. That would have been really nice. Just doesn't turn up with so much, like, you can just tell from the way the candles are. There's just so much, like, contention and buyers and sellers, like, fighting, for lack of a better word. And I would have loved to see this all get swept out and then run. But, like, this is still fine. Like, this is still fine. You've got, like, structure shifts. It makes sense. Like, this trade makes sense, objectively. And if you'd scaled in through here, you would have printed. Absolutely printed. Because there's no point in where this gets broken. Potentially here. You're going for max power? Have you not taken one yet? Jeez. That's what I did when I was not worrying about the money last year. I didn't take payouts for ages on my 5 accounts. I just ran them up. I just wanted to be detached, as detached as possible from the process. So I just didn't want to take payouts to make me more, like, stressed out. Like, because right now, I mean, like, when you're, even me, guys, I mean, like, if you look at my equity, right? When I'm sitting here, like, when I was at 2K, like, you do kind of stress because you're like, fuck, if I lose a trade or two, like, I'm actually in real drawdown. Whereas, like, right now, I could lose 6 trades and I'm just back to baseline, and I'm chilling. Which is, like, a big one. And then the more and more equity to build, more and more aggressive you can be. As long as you're not aggressive with risk management, you're aggressive with trades, that's fine. Never be aggressive with risk management. Always be aggressive with your trades. The more and more equity you build and the more confidence you build, be aggressive with trades. Never be aggressive with risk management. Never put more than your allotted risk allocation per trade. But be aggressive with trades. I'm aggressive all the time with trades. All the time. But I have the equity to play with. And I have, like, my personal account has a lot of equity to play with now in comparison to how much I put in from my payouts. Like, a lot. So, like, I can be fairly aggressive. But yeah, that trade, Michelle, is really good. Like, really, really good trade. If you trade like that, you're fine. So line to the high time frame. There's supply there or demand there. There's an order block. I went and checked. You're good. That's basically the strategy. And then all you want to do from there is trail and scale into that position. And that kind of trade will go from, where it was there to, huge risk reward positions. Yeah. 25 bandos will be pretty nice, Benny. Not gonna lie. Do you guys hear my music? I presume you can't hear my music. It's okay. No, the Q&A stuff here is for you guys to ask questions. So if you guys have any questions, just ask. I'm just waiting for it to officially start at 12 o'clock. So I'm just chilling because I got nothing to do. I won't break even and the market's just going up only. So I'm like, what am I going to do? I'm not just going to sit there. Like, if you guys have any questions, just ask. I am an open book. It doesn't have to be just about trading. It can be about whatever you guys want to talk about. We talked about a lot of random shit last time. Near the end. The only thing that's stopping most people from, like, I should be profitable, the problem is, like, you just have to be able to execute for a long period of time without doing dumb shit. And I see it all the time. Now that I've got, like, a mentorship. People do really well, and then they'll just have one day where they do something absolutely ridiculous. Like, and you're just like, well, no amount of mentorship or learning on the charts is going to stop you. And, like, Sydney, she's in here, she talked about it. Whereas, like in the Discord a couple of like a day or two ago, like, no amount of teaching or anything like that, and, like, you learning, like, on chart or, like, me talking to you about it, is going to stop you from doing dumb shit if you want to do dumb shit. Like, it's not. And, like, the thing is, most people aren't, like I had a guy who came in the mentorship, he, like on the first week, he took 22 trades in a week, and then we just was like, okay, this is absolutely fried. Like, this is cooked. And then he, since then, has done really, really well, where he's, like, we've got him, like, actually put risk settings. We put, like, max trades, and then now on the week, like, last week he made 12R. This week he's up, after today and the live trading that we did, he's up, I think, 9R on the week. And it's like, he's doing well now. But it's just like, what I'm trying to get is, like, a lot of the people will do really well. Like, and one of the guys who will probably be in here later on today, he got funded, got his account finished, and then, like, made 6.5R, and then messaged me the next morning. He's like, I full ported my account. And I'm like, you just made 6.5, like you made 6.5R from the process, and then you're just, like, giving it all back for, like, no reason. And it's just more about, like, the psychology side of stuff. Because if you can be the best trader in the world, but if you give back everything, if you have one day where you give back everything that you've made, like, you can have the best analysis in the world. Like, I don't think that I'm the best analyst in the world, but I definitely think that I'm really, really, like, rock solid when it comes to, like, being chill about my trading and just taking it easy. I definitely think I'm good at that. Like, I don't think I'm the best analyst in the world. Like, in hindsight today, probably should have been bullish by it. But it's just like, I don't let it crash me out. I don't let it, like, fucking fry me. Like, I just sit there and go, cool, like, I went break even, Got my chicken nuggets for the day. Got my chicken nuggets. It's fine. Got some chicken nuggets. Yeah, and that's the thing. That's just about having, like, the right. Because, like, if you were in this Discord and you said, "Hey, bro, I'm up $8,000," and, like, I've had it happen to people in here, who, like, they'll be up. Like, C, there's this girl in here named C, and we talked for a fair amount, and she made $24,000 in a couple of days, like, really risking a lot, like, a lot of money. She was risking basically the entire account, which is fine. I don't actually think there's anything wrong with that. Like, I think it's dumb, like, if you want to build the business consistently, but I do think that it's, like, it's fine. It's a valid strategy. I think it's a valid way of trading if you just want to start to, like, pump payouts. But I said to her, I was like, hey, bro, like, I think it would be a really good idea if you just risk micros, couple of micros, get your $150 days, and then take, like, a massive payout. And then she didn't do that, and she ended up giving all of that $24,000 back. And I'm like, why? Like, the money that you make on these prop firms isn't relevant until it's in your bank account. So, like, just take it slow. Take it slow, take it easy. If you make a whole lot of money, take a step back. Get those $150 days and stack those payouts. Because my personal account is only as big as it is right now because I stack payout. I just keep getting those payouts, keep putting them in my personal account, keep scaling up the risk on that. That's it. Yeah, that's a really good analogy, Benny. I like that. Ben, is it Benny or Ben? I always feel weird. Don't know which one it is. Yeah, the consistent psych work is non-negotiable. What Sydney said is 100% true. It's all about, like, your brain. Because I said this to a mentor yesterday. I was like, most trading isn't about managing the trade. It's about managing yourself. You are your worst enemy in trading. You personally. It's not the market. The market doesn't give a fuck about you. The market doesn't care. Whereas, like, you can do a lot of damage to yourself if you're not careful. Yeah. Oh, okay. I'll call you Ben. I just go to the daily. I always contextualize everything through the daily. Everything is working off the daily. Because it is working off the daily. And also it comes back to what I was saying, right? Where it's like, like the biggest high time frame moves, like the biggest pivots, what we talk about, like where the market moves expansively and actually is aggressive, are going to come from the daily chart because there's the most volatility behind it. Well, not volatility, but there's the most, like, I don't even know what the word be for it. Like, there's the most, like, inflows of capital to move the market this amount. So, like, obviously you're going to want to, like, sit there and go, like, I'm going to always contextualize off higher time frame levels and higher time frame narrative, because that will drive the price more aggressively. Like, it's like when I was talking about this trade, this long from here to here, which you could have made 700 points from this move. That's all high time frame context. And then when you get into those trades, you can scale and trail those and then make a lot of money. So it's always like the first thing I do is I just basically go through like this, and I go from the daily all the way down, and then just like construct my ideas for the day. So, for example, my idea for today was to just basically, I marked it up yesterday, but was to basically sell off here, and then I did sell off here. I just missed the move, and then I wanted to wait to see how it reacted inside this 4-hourly here and this 30-minute, and this is the trade I took. The trade I took was here, and I took short and got my chicken nuggets and got out of the day. Got my $15 across my 5 accounts. Got out. Because I was clearly wrong. Because I was like, in my brain, I said to you, in my brain, with the short that I took. If I'm wrong, I want to be out of that trade. Like, I don't want to hold on to it. It's what I was saying to you guys. Cut your losers really hard, really fast. Get rid out of them. Let your winners run. If you're correct, let it run. If you're wrong, get out of it as quickly as possible. Take the risk off the table. Don't give money back to the market. Get as much risk out of the market as quickly as possible. Because this could have just, like realistically, like knowing my strategy, this very well could have been like that. I'm not even joking. Like, I'm not joking. That could have just been death, wash out all of these, like, longs. Just run aggressively. Like, it could have looked like this. You know? Like this, where it just dumps off. That's 20 with no scale, and it's like huge trade, right? I'm not shooting for this. If this happens, great. I'm just shooting to see what happens. So I don't mind if this gets me out of break even. I don't mind if it comes down to here and then rallies. Because I'll get like 1 or 2 hours out of this trade if that happens. If it does dump off, great. Awesome. We're vibing. We're chilling. It's just about letting the market do what it wants to do and framing it through the high time frame narrative. And that's what I did today. Just using the 4-hourly. There's OB here. Using lower time frame OBs. Protecting myself if I'm wrong, or if the market doesn't do what I want it to do, and then just moving on. Not getting too stressed out about it. It's hard. I mean, it is difficult. It's multifaceted. There's a whole lot going on. There's a lot of moving parts, but also the upside is so high, right? It's like you can go trade a basic strategy like Orb, and you'll probably like do okay. You'll do fine. You might, make money, decent money, but the upside of the strategy is so high that when you're correct, that it's worth it in my opinion. How are you, Safe? How are you, bro? Haven't seen you in a while. How's things? You responded. My trade band has been so shit lately. Greedy. Can you write him? Manager I took. Sure. Are you trading my strategy? Or are you trading your own? So I remember you weren't trading my strategy back in the day. You don't understand it? You don't understand the short? The short was off this, like, you see this order block here? On the 4-hourly here? So basically went like this. I went to the 30-minute. I was like, great. And there's a 15-1 over there as well. And I basically just waited for the market to come up. We swept this liquidity in here into this 30-minute order block, 15-minute order block. It rejected. It came up, tried to retest this area, failed, and I entered it. And then I basically went, the moment it hits this level, I go stop loss to break even. And then if this is the top and the trend dumps, then I make huge amounts. Like, I don't even know where this would have gone to, realistically. I mean, even just there's 7R. So the risk to reward here is insane. And like the downside is nothing. It's $100. Look how much equity I have. I don't care. There's just like a whole lot of risk to reward here. And like it's the narrative is off the high time frame. Also, there's a daily order block that we were inside. This is technically not an order block, but a daily engulfing candle that could have formed. Like if this played out, this could have formed an absolute giant red candle. I obviously like it didn't, but I also didn't put myself in the position to get fried, and I didn't try and like catch every single, like I wasn't married to my bias to the point where I was selling every single rejection on and burning through my account trying to put trades on, because I was like, the moment I saw this, I had a lot less confidence in. The moment I saw this move up and then this move down and then this move up and us form high highs, I was a lot less confident in longs, but I still was like, I'll chuck on some risk because there still is potential in the trade if we are right. And if we're wrong, then we just lose money. Does that make sense? Why I took the trade? Michelle, does that make sense? Like based on the strategy, because you've got this sweep here, right, and that sweeps into the the 30-minute, 15 inside of the 4-hourly, inside of the daily potential reversal. The worst case is we lose at 1 hour. It's like $100, not the end of the world, and then the risk to reward is quite high. And if we just trail this throughout the day, we're good. Yeah, and I mean, the thing is, I'm also trying to tell you guys that, like, and I was saying this to the guys in the call. I'm just gonna unmute you guys. I think I was saying this to you guys in the call, where I was like, you guys, I'm trying to teach you guys the strategy so that you can trade it by yourself. There's gonna be times where we might be thinking we might trade the exact same strategy, but we have the different bias. You might come into be like, I'm long bias and make fuckloads and just print and get some crazy run of trade. And I might be coming today where I was like, oh, I'm going short. Like, this makes sense to me. But like the point of this and the point of even like the mentorship, point of everything, the point of literally like is to get you guys good at trading so you can leave this Discord. So you don't need to be here anymore. You can just go and learn by yourself. You can learn, get good, and then be by yourself and trading. You can stay if you want. And I think everyone likes the community, but my point is, the whole point of all this is to get you guys good at the skill independent of me. Because a lot of people, and you guys probably see this, like, they do live trading, and there's, like, live trading is definitely useful. But, like, a lot of people, they'll do live trading, but that's all they'll do. They won't actually teach you to, like, think. And then all you're doing is beholden to someone else for trade ideas for the rest of your life, theoretically. And, like, that's just stupid. You don't want to be in that situation. You want to learn, get good yourself, and then be able to trade and be independent and may come up with trade ideas by your lonesome so that you can actually have freedom. You don't have to rely on scary bald guy on the internet to give you trade ideas every day. You can just trade by yourself. That's the whole point. That's the whole point of myself. I personally think copy trading and all that stuff is really bad for you guys. Like, yeah, you'll make money in the short term, and I think you guys are on some of them are on a lot of pain. They want to get out of their situation, so they think that, like, okay, I'll go copy trade, and yeah, it might get you out of your, I might do a lot of work. There are a lot of good traders out there that you can copy trade, but ultimately, it is all about like the getting good at the skill yourself, so that you can do this forever. Yeah, no, there's 4 hour here. was a great trade. This is the trade of the day. This short here and this long here is the trade. This was just not a good trade. It wasn't. No, this is fine. This is a fine trade. It just didn't play out. This long is 100% what you should have been doing. I was just wrong on my bias, but I'm not trying to come and present myself as some infallible trader who can do no wrong and knows exactly what's going to happen. Because trust me, if I did, I would be a lot more in a lot better position than I am right now. I'm making a lot more money if I knew what was going to happen every single day. I just don't. I was just wrong. I was just wrong. I just thought the market was going to potentially come up and dump off. I was just wrong. It's okay. But I get these longs. Like, these longs were definitely really good. Yeah. That's just on me. That's just me. I'm not perfect. Sometimes I'm wrong on the day. But I protect myself. It's what I keep saying. I protect myself when I'm wrong. If I'm wrong, don't just I'm on the wrong side of the market. My idea is wrong. I'm still not that wrong. Still got my chicken nuggets. But I still got my break even, right? Like, I'll be transparent. There are a lot of better people at trading the strategy than me in this Discord who I've taught. Okay, maybe that's not better than me because they haven't been consistent for as long as me. But there are a lot of people who probably read the market better than me. But then, like, they do dumb shit. And, like, I think I'm psychologically a lot more sound than a lot of people where I can just sit there and chill. Like, I look at, like, not what I want to out them, but I will. One of the guys who made a whole lot of money, he ended up not getting his payout because he was just ended up cracking under the pressure of getting close to his payout. The sweep long? Here. This liquidity just here. So if you had this 30-minute and 15-minute order block here, this sweep here, all of this liquidity through here got swept. All of this. So it got swept out and then rejected, and that was into this order block here. Because you've got this 15-minute here. It's not good. Like, this is not ideal. Like, this is the reason why I didn't take it is because it's loose. If this was really expansive, I would have taken it in a heartbeat. But it was just like, it was just a bit slow. And I was just like, yeah, I don't know about this one. But in hindsight, this 4 hourly is more important than anything else. This 4 hourly is great. And this is what I should have gone off, to be honest. But that's okay. Does that make sense though? You don't, Benny, but that's why you don't be an idiot and you build a personal account. You don't know what's going to happen with these prop firms. These prop firms if you guys read the terms of service of prop firms, you wouldn't want to be with prop firms for any longer than you have to be. They can ban you for no fucking reason. They can just not pay you out for no reason. Obviously, they're not going to. TopStep's really good. Last time I requested from TopStep, it was in my account in under 24 hours. They're great. But you need to be aware that just because they're good now doesn't mean they're going to be good forever, and you need to hedge against them being pieces of shit. And that's why I build my personal account, because I don't care about the props now. There's just supplementary income. The worst is they all go under and I just go, cool, trade my personal exclusively. Don't deal with any of the bullshit. That's why I don't deal with, like, Apex. Like, I have 2,300Ks with Apex. I don't trade them because I've heard so many bad things about the platform. Like, so many bad things. Like, and I'm like, I've heard that the only way that you can get paid out is basically if you're like you're a proper influencer. Like, a guy made $2.3 million. Like, a regular person, like, a person who wasn't making any content, anything, was just like a regular person. They're just like, printed, did really well. They ghosted him. It doesn't, and we're not talking about small payouts. I'm talking about, like, massive payouts. I'm talking about the rules behind them. They've got, like, annoying rules. They just do have annoying rules. Like, I have a friend who made $140,000 with Apex, and then they were asking him to basically live trade in front of them. They had to record all of his trades, go over reasoning for his trades, all of this shit. Like, that's not what you want out of a prop firm. You want a prop firm who's going to pay you. You know? Also with I know Apex pays out. I'm not saying Apex doesn't pay out. I'm just saying that my use of Apex would only be for massive scale, massive payouts. Like, I'm talking 6-figure payouts plus. At that point, they're going to be annoying. They definitely do pay out. Apex definitely pays out, 100%. It's just if you become a liability to the firm, they're going to be annoying. There's a guy who took 2.3 million and they ghosted him, and then one of the big influencers, the Strong Trader, don't know if you guys follow that guy, but he had to tweet them and be like, hey, bro. And he has an audience, so they paid out. But it's like, you know, even we talk about the big payouts, Trader Kane and JadeCap, two of the biggest payouts in history. They are both banned from They both are banned from Top Step and from Apex because they make too much money. If you make too much money with props, you will get banned, or they will make your life hell and annoying. Top Step's been fine with me. I haven't had any issues. Yeah, that's what I'm talking about. Yeah, safe is citing what I'm talking about. And that happened on Twitter. So it's like, you know, I'm not saying don't use them. I'm not saying they're at all. I'm just saying be very careful about, like, being aggressive with your prop firm account, prop firm payouts. Like, keep them. Use them to trade. Use them to get ahead. Use them to build a base of capital that you can make money from forever. Because then you'll always have income coming in from your trading. Because once you have the skill, all you need is capital. You can use the prop firms. You can make a whole lot of money from them. But you want to always have hedge against them being pieces of shit. And hedge being, like, the entire industry could die tomorrow. You don't know. We don't know what's going to happen. Every single prop firm could shut down tomorrow. You don't know. You don't know. They could all, new legislation could come through. The SEC could put something where they think prop firms are irresponsible for retail traders. No one has a business. And no one, except unless you have a personal account, has a business. I'm not saying this is going to happen. I'm just saying be careful that it's going to happen. Hedge against that happening. Build your own personal account. Start to even potentially put savings. I'll give you guys context with me and Nicole. We are putting money, like, if I do well this year and I'm consistent and I feel confident, I'm not having crazy blowups anymore, we're selling all of our long-term investments into, like, the stock market and Bitcoin, and we're just putting it into the personal account. Because we just want to grow, right? We don't want to be super reliant on those prop firms. Like, it's cool. We can still make cash flow for them. We just use TradeSync and make free money if you're good at the skill. Basically free money. But you don't want to be putting yourself in the position where you're always beholden to them forever. You want to be like, don't care. Like, I don't care about these props. Like, if they don't exist. That's why I say, and it's why it's tough to talk to people about it, because people want to use prop firms to change their lives. And you definitely can. But you look at, you guys probably all consume trading content. Look at how many influencers that you've probably seen content from in the last 3 months who have been banned from Top Step. And yeah, there's reasons they're getting banned, but still, the point still stands. Because they are casinos. They are casinos. Because most people operate with them in that kind of paradigm. Like, even I was looking at silver yesterday. I was like, do you know how much size 5 minis is on silver? It's like nuts. Like, 1 point is like $5 million. It's like 500 1,000. That's just insane. Because I was like, why is everyone so, like, hyped up about copper? Hyped up about silver? And I was like, the volatility with 5 minis is just absolutely absurd. Like, yeah. Yeah, if that, bro, just one micro. Yeah, it's tough. I just think it's about being careful, putting yourself in the position to win, which is why, when people don't listen to you, and they start making money, they're like, hell yeah. Even if you go live, I like firms where they won't push you live because they actually have an interest, not short term. Yeah, Yeah, I mean, why would you want to go live on a prop firm if you can go live on a personal account? That's the better question to that. Like, why wouldn't you just want that money in your bank account so you can trade it and not have to deal with a third party? Yeah. Well, okay. Well, we think about like this, right? Like Benny, I'll give you an example, bro. Theoretically, Ben, sorry. Theoretically, you're about to take a 25. You're aiming for a $25,000 payout, right? So, what do you think the difference right now for you? And you could do this right now, and it's the same thing. You could take out the 25. You could put 10K into a personal account and risk 500, which is the same as what you're doing now, risking $100 per account. 2K drawdown, 10K. That's the. You have the equivalent of a top step. You have the equivalent of of 5 top step accounts in terms of risk and in terms of drawdown from them accounts. You could completely get rid of the top step accounts and just be completely out of the prop firm game. Completely. It's the same thing. Essentially the same thing. The only thing that's different is if you scale in and contract sizing. That's it. But you could do that. You know, like you could do that. I always say, like, you know, that's free money, essentially. You just made 10K for free, essentially. You just made it from the skill. You obviously paid for the accounts, but, you know, if you just view that as, oh, that's not my money, you know, even if you just look at it from the perspective, like, you could just go, well, now I have 10 top step accounts. I just have a 10K personal, risk 500, 5% of the drawdown, like you would on a top step account. Very, you know, minimal, and then get the 5 top step accounts, use TradeSync, now you have 10 accounts. You do that and then keep the other 15K for whatever else you want to do. Like, the point I'm making is that, you know, then you actually have your own little thing stacking up, making you money forever. And you made 22 hour in days. 22 hour right now on 10K. If you were traded that yourself, what? That's another 10. You just doubled your account. You know. Sure. I mean, I'm not going to go over that question again because I've asked it twice, but you can watch it back in the recap of exactly how I find trade. Like, I'll do it again. So if we look at like today's trade, when I was going in and this was naked and I didn't have any idea, all I was looking for is like, where is the high time frame moving? And for me, although my bias was wrong and I ended up just going break even on the day, I was just looking at here. So the first thing I did was like 4-hour bias, obviously. Okay, we've got a displacement down. All I want to try and do is see it trade back in and reject. Also, like the daily was quite bearish as well. I was like, cool, we've tapped into this order block and then formed a new one. Like, this is probably fairly bearish. Like, I want to be short biased today. So I was like, cool. And then from there, I went on to the lower time frames to find more order blocks. So there was a 15 and 30 minute in here. I just simply looked for that. And then I just waited for the price to trade into here. So one of my mentees, I was kind of annoyed with him because he took a short here. And I said to him, look, I get that you're trying to short this. And he would have made, I think he made like 1 hour on this. But all I'm looking to do is for it to trade into multiple stacked order blocks because that's where you're going to get the highest probability, I've found, of trades playing out. So this is a 15-minute, 30-minute, 4-hourly, and daily order block. And we're also fairly bearish on the high time frames. So I was like, cool. Like, great. We've got like a reason to enter this trade. And then I simply entered here. I got like a slightly good entry. And then just went break even at the lows. Went break even right here. And then I went break even. And then I called it a day. Because I was like, the moment this failed, I was like, we're fucked. This is just going up all day, which is what happened. Even in here, I have the recording. I might actually post the live trading session as well that I did with the mentees. And like, I was talking about this where I was like, I don't feel confident in these shorts. the moment this formed here, I was like, this is not going down. Like, this doesn't form. If this is going to form, especially with the kind of, especially with the kind of volatility I expect from these high time frame zones, if this is going to fall over, it was going to fall over here. So I was like, I'll take it. I'll try it. But I also unlinked my personal account because I was like, fuck it. I'll just like risk $100 for these guys, like for the minties. So I was like whatever. Like I probably wouldn't. If this was attached to the personal account, this would have probably been like a no trade day. Like it was fine. This is acceptable because it swept. The reason I took this is it swept this liquidity here, traded into the 30-50 minute order block, came like rejected, didn't quite sweep liquidity again, but did reject, and then gave us like an actual sell off. And then I was like, fuck it. On the 2 minute, we'll get in there and we'll just trail at this low. That's basically how I find trades. So going in, I just look, where's the high time frame, levels that I want to trade from. Unfortunately, the actual high time frame levels was this order block here today. It was this 4 hourly. Because there was a whole lot of reasons to enter on there. So pretty much the exact same reasons. It was like a 30 minute, 15 minute, and a liquidity sweep. So, and then you would have caught this entire long short, this entire move long, and made like 1 million. So I was just wrong, but I never said to you guys that I'm like the man. I'm just, a decent trader who makes mistakes sometimes, who just doesn't get the right read. I mean, I don't think anyone gets the right read on the market every single day. I think that's silly to expect from anyone, including yourself. There's going to be days where you just don't understand what the fuck's going on. Like today, I was like, I don't know. I mean, like, I was just making decisions based off the information I had, which was like, I still believe shorts could play out. Also, this was a very high risk to reward play. I was like, if this really did rip to the level of volatility these high time frame zones produce, this is a 20-hour trade with no scale-ins. Like if it came down and seeked this liquidity out, which it could have, this is a massive trade. So I was like, I'll take it and I'll just trail really aggressively. But I was pretty confident we were going to keep moving up all day after I saw this rip, to be honest. Yeah, I mean, you can. I'll post the chat. I literally did that analysis 3 minutes before the market opened. I've been trading this strategy for so long. The thing is also, like, that's the thing, right? Like, I've been trading this strategy for like 3 years. Like, I mean, it's also not that difficult. I know it just seems like it, but it's not that difficult, right? Like, you look and it's really not that difficult, right? Realistically, you're just going, like, you just have your time frames that you're interested in. You just cycle through them and see, like, where is the levels where, like, things have aggressively moved off and where do they all align and what do I believe the market's going to do today. Like, do I believe, like, for example, I thought the market was going to sell off. And the reason why I thought the market was going to sell off was this. On the daily. This on the daily was, like, really, like, I was like, geez, like, this could get really gross. And I was like, well, the worst case here is, I was like, the best case is where I was like, the worst case here is that it tests this order block, this bullish order block on the like daily time frames. Whereas like if I can just catch like the shorts down to that, like obviously I'm not going to catch the whole move because I can't hold overnight. But man, we say that, but I potentially could. I mean, it's not the first time we would have done it. We would have done 700 points on the day, and you catch 700 points on the 2 minute candle. Like think about it. Like I'll give you, like think about. Imagine if this did fall over. Like. I don't even know what this is. Like down here somewhere. No, it's actually like really down. I think.
Oh man?
It's down a lot. My point is it's down a lot. You're getting a massive trade, essentially. My point is you're getting a massive trade. Right? So yeah. That's how I do it. I just start on the daily and then I just move down progressively. Daily and 4 hourly. I said it earlier. Daily and 4 hourly is the frame of the market. What do you think is actually going to happen? Because obviously we're looking to try and find the pivot points in the market because our strategy works the best when we're trading like that because it trends. And then you're using the 1 hour, 30 minute, and 15 as context of where to have actually like areas to actually trade from, and then using the 5 minute, 2 minute, 1 minute as your execution. And that's simple as that. Pretty simple. It just seems intense because you probably not done it a lot, but then when you do it like every day for 3 years straight, you'll be like, oh, I can do this shit in like 5 minutes. and like really figure it out. You know, just seems intense because you're not used to it.